demand destruction is going to be huge. It already is, and we are expecting almost 16 million barrels per day of decline across the month of April. That number could easily rise to 20 million barrels per day or higher.
All right, so let's talk about the fact that we have seen prices fall precipitously over the course of the last 4 to 6 weeks. It's continuing a trend that's already been in place, but now the story has changed. What exactly is the main driver right now of oil markets?
The primary driver is absolutely the shutting in of the global economy due to measures taken by different governments to arrest the spread of the coronavirus. There is a lot of focus on Saudi Arabia, Russia, and the oil price war, but really that increase is a drop in the ocean versus the demand declines we are starting to see in the market. And yes, while that is putting additional pressure, unless and until we see a recovery or a normalization in demand, the risk is we are going to run out of global storage capacity, which has never, ever happened in the history of the oil market.
So it's interesting that you bring that up, because we're already hearing reports anecdotally from places, certain, again, not widespread, but places around the world, where we hear in physical oil markets that dealers are actually paying customers to come and take oil off their hands for them. Is this something that we could see play out in a more widespread fashion, the fact that physical markets cannot, at least for right now, be balanced with all the supply coming online?
Absolutely. And even though you mentioned WTI prices have fallen below $20 and Brent is around 22 right now, the physical market is already starting to discount the crude far more severely. I mean, dated Brent is already trading $3 below Brent, like Urals, which is the Russian benchmark, is trading almost $5 under dated Brent. So netbacks for several producers, even in Canada, even in parts of the U.S., are already in single digit. That's telling them to shut in production, but it takes time. And that's why you are hearing of certain deals where producers are paying people. Essentially, crude is negative in those locations. They're paying people to take that crude.
All right. So in the United States, and I'm sure this story is playing out elsewhere around the world right now, I'm looking at the AAA prices for gasoline from the American Automobile Association. Right now, the current average is $2.01 per regular gallon of unleaded gasoline. A week ago, it was $2.13. A month ago, it was $2.45. The same time last year, it was closer to $2.70. This is supposed to be, in fact, a tax break for consumers, but consumers aren't actually getting it because they're not driving. How much lower could gasoline prices go as a result of this?
I think jet and gasoline are the two worst affected products. You could see gasoline prices, in some parts of the U.S. potentially even below $1 at this rate. However, to your point, nobody's actually benefiting from this because there is no driving or there's no flights at the moment. So nobody will really benefit from lower airfares either. So only when and if things normalize will consumers feel the benefit of this. Right now, refiners are under huge pressure. We're expecting big refinery run cuts. That's why this is unprecedented. Usually, an oil price crash is beneficial for refiners. Right now, even they are under pressure because this is such a big demand shock.
Amrita, before we let you go, just a few seconds left here. Where would we see some of the positivity in the oil markets if we were to see a bottoming process start? What parts of the market will we look for?
I'd say the first and foremost, you have to kind of look at U.S., Europe for the demand signals, for the government guidelines to see if things are starting to bottoming out. But really the next step is going to be the supply side. We are going to start to see shut-ins in the U.S., in Canada, in other parts of the world as well. That's the only time, or that's the only sign that things are starting to rebalance. And then in the second half, really towards the back end of this year, we could start to see some easing off of pressure on storage.